Good day, everyone. It's InvestorZilla with a deep dive on Shift, ticker symbol SFT. I like to talk about stocks, crypto, and pretty much everything investing. For Shift, I'm going to get into whether I think this stock is a value, growth, or spec play. I will also share with you the positions I have in the stock. I'm doing this for fun, so please make sure you do your own research on any stock before buying it. But before we get started, please take a second and just Hulk smash that like button. It really helps let me know that you like the work I put into this video, and I'm constantly looking to make them better. So please leave any comments or feedback in the comments below. Please hit that like button, and it helps me grow this channel a bunch. So the first thing I want to do is look at what the company does. Basically, Shift is an online marketplace for buying and selling used vehicles. Taking a look at their website, you can see basically you shop for deals online, request a test drive at home, and if you don't need a test drive, they can ship it right to you. Sounds a lot like Carvana to me, but the difference here is they really do focus on the older vehicles. One of the other things they do is they really push quality, at least on their website. They do a 150 plus point inspection along with the reconditioning they aim to fully do in-house. Those are things that make me more confident to purchase from them. The last thing I would want to do is buy a car and have something happen as soon as it gets to my house. While I haven't gone through this process myself, there is a lot of focus on making financing easy for a car. Honestly, having bought a Toyota Tacoma recently, if I could have done all of this online, test drove risk-free at home, had them handle most of the paperwork, I'd actually love that. Comparing the same truck I purchased to one that they had on their website, prices were not that far off. Listening to the conference call the other day, it was clear to me that they really do need to push vehicle volume. And they want to do this by having a wide range of vehicles in a wide range of price ranges. This is where I think trade-ins come in. I'm assuming a percentage of their vehicles come from trade-ins. They get reconditioned and then sold probably at a higher gross profit per unit or GPU. It says you can complete the paperwork for a trade in under 2 hours. Honestly, I think this is a place they need to work on. 2 hours seems like a lot for something that I'd want to put time into. There's a very simple financing workflow. You can see in the bottom right what the process is on their website. There are basically 6 steps that you go through. I love that you get pre-approved and then you can filter cars for your budget. I really do think this is going to become more popular with the millennial generation. You can also see the wide range of financial institutions they work with. This method of indirect lending makes buying cars a super simple job for the consumer. It does make me wonder, though, if in the future, if they could actually own the servicing rights, which I mean, do you as a customer pay your payment through Shift so you keep that touch point, or do you pay it directly to the bank? The website itself is actually very simple. It's very clean, but it's almost elegantly simple. You can use the 360 walk around and the interior views, which actually give you a great picture of what the vehicle looks like that you're going to be buying. You see the photos of the vehicle, the features, the history, the accidents, past owners, mileage, all the basic information you'd expect. The cool thing, though, is you can also view the Carfax report. At least I looked at a few, and they were on every car that I actually looked at. Location, this is where it gets a little tricky for me, because it seems like you can ship a vehicle from anywhere in the United States, and I'm guessing the shipping cost varies by distance, as I've seen $200 off the shipping fee shown on individual car listings. The best I can do is pull up the jobs page and see the locations that they are hiring concierges. So Oregon, California, Texas seem like the major locations, with Washington only having a single job open there. I'd imagine people in those major hubs would have an easier time getting a vehicle delivered to them and at a cheaper cost. Now, the management team at Shift, I'm actually going to spend time in this video to talk about George and Tony, but I'd recommend you checking into the entire team as it's important to really understand the full picture of the company. Now, on Shift's website, George Arison is described as the co-founder and co-CEO of Shift. Previously, he co-founded Taxi Magic, now known as Curb. This actually means that company was acquired, the first on-demand mobile transportation booking technology company, and worked at Google and BCG. What's interesting to me about Taxi Magic as I looked into it is it almost seems slightly like Uber before its time. Now, taking a look at George's LinkedIn, you can see he's been at Shift for 7 years. He's also served as an investor, but none of the companies listed that he's invested into actually stand out to me. He's been a project manager at Google. He was there for 3 years. And then from 2007 to 2010, he was at Taxi Magic, which was that company that he founded. I did find this one article when trying to find more information about him and actually watching some of his interviews where it said he saw Uber coming before Uber did. So that kind of like lets me know that I'm not too far off with what Taxi Magic actually is. Now, Toby Russell is also a co-founder and co-CEO of Shift. Now, I'm usually not a fan of co-CEOs, but I think this will make sense in a bit. Previously, he was the managing VP of digital at Capital One, where he led the bank's technology transformation to mobile. Toby co-founded Taxi Magic. He's been working with George, or at least known him since 2007. This gives me confidence that they will work great together. Now, looking at Toby's LinkedIn, he's been at Shift since 2015. I find it interesting that he joined later than George. He was at Capital One from 2011 to 2015, but he is tagged as a co-founder. I find that bizarre. So he would understand the financing and direct lending side of Shift due to his time at Capital One. I have a hard time finding much press on Toby, but I did find one article from July 2019 that says, from liberal arts PhD to pre-IP startup CEO. I had the chance to listen to a few interviews with both of them, and they both seem really excellent in their business acumen. And I believe they are good leaders for Shift. And I believe as co-CEOs, having worked together in the past, they know how each other behave and they can work well together. I next start digging into the company culture. And to do this, one of the resources I use is Glassdoor. This is where it gets a little bit rougher, in my opinion. You can see the review average of 3.2 stars with 181 reviews. Only 54% would recommend this company to a friend. 74% approve of the CEO. As I started digging into the actual complaints, it's clear to me that there's some really tough growing pains going on for this company. A lot of the concierges and drivers seem to be the unhappiest. This is something that I'm going to monitor going forward, but I would say this is probably like an okay Glassdoor profile. They're going to have some time recruiting if they don't work on fixing the problems that have been identified here. I don't know if people understand like how important Glassdoor is to recruiting good talent. I would feel a lot more comfortable if this was a 4.0 rating and a 90 to 95% CEO approval. So speaking of recruiting, we're going to move on to the jobs, which I don't want to discount how crucial it is for Shift to have a great culture and work environment for them to be able to execute. They have 118 jobs open. Some of the really interesting ones are focused around data science. I'm actually really curious what they are hoping to achieve to differentiate themselves from the competition with data science. The fact that they are looking for a director of data science shows me they're probably early on in that journey. They're also looking for quite a few drivers, car concierges, designers, product managers, software engineers, financing specialists, and the list keeps going on. In general, this company is growing, and I mean growing fast. But in the conference call, they mentioned they believe their recruitment costs may decrease. I find this really hard to believe, having been in fast-growing companies that needed to recruit a large number of positions like this. If they want to hit what looks like high hiring numbers in 2021, they're going to need to work on marketing themselves hard to get some of those competitive positions filled. Now, let's talk about the company's path to going to public. The piece I want to call out here is $340 million. $340 million to support growth and working capital. If this company walked away with $340 million during the IPO, they are going to be cash loaded. Now, they just released the Q4 numbers and announced growth of 168% year over year for the quarter, which is just mind-blowingly great for a company that, sells cars. That is incredible, especially for the year that we just had. 73.4 million total revenue for the quarter, which was in the guidance given by them when they filed. Total revenue for the year was 195.7 million. A few major highlights include launching a Seattle buyer market. Remember that one position in Washington? Launching seller markets for certain vehicles in 4 locations. Marketing, so national TV campaign, so they're building brand awareness. Record in-house reconditioning volumes with over 500 cars per week. And they also built a car finder quiz to help customers find a vehicle that fits their needs. Now, their latest balance sheet shows a total asset amount of $312 million. Let's keep that in mind as we get to the stock itself. This company is cash heavy, which can let them push their brand, expand their inventory, grow, and grow fast. As long as they execute properly, the company is poised for some incredible growth in 2021. Now, looking at the statement of operations and comp loss, the main thing I want to call out is the revenue grew in 2020 despite being limited for parts of the year due to the pandemic. I mean, they actually shut down from what I could find for a certain amount of time. Their revenue grew from Q4 of 2019 to Q4 of 2020, and that is just incredible. And the amount of growth is even more incredible. It also doesn't appear like their operating expenses are increasing as much as you'd think for the kind of growth they've seen, especially with having gone public, which shows that they are executing at a high level. Remember, anytime a company goes public, they need to bring on an incredible finance and accounting team, an incredible legal team, and the expenses of that go through the roof. And they have done that at a rate that I think is very sustainable. Now, finally, I want to look at the number of units sold. Overall, it went from 11,091 units across e-commerce and wholesale to 13,135. They are projecting even stronger growth in 2021 as they fill out their inventory with wider price ranges and a larger number of selection of vehicles. I also love that they call out the number of monthly unique visitors to their site and their average days to sell. Those are numbers that we should keep an eye on as we keep checking back into this company. And you can see both of those numbers are trending very favorably. Now, the stock itself, this was taken tonight, which is a few days after earnings, and you can see that it's reacted very positively since earnings came out. And I want to just say, like, it wasn't that long ago when this stock was under $8, and I have just unbelievable hope that this company can actually be a lot bigger than what it is right now. So the main thing I want to call out here is, remember this company had 312 million in assets and about 200 million in cash? This company has a market cap of 716.94 million. It wasn't very long ago, this market cap was 630 million. Now, if that market cap is calculated correctly, which from all the numbers I can see is correct, this just shows me this company is extremely undervalued currently. I could see the stock price and the market cap being double what it is right now, just based on their revenue and their balance sheet and the growth that they have. So the team has to execute, and they have to win the volume game by selling a lot of vehicles. So I don't want to shortchange that, because the stock will only be valuable long term if it can eventually turn a large profit by winning that volume game. So I just want to say, I see this stock as purely a spec play. The company is not profitable. They do have lots of cash. They have great growth, but it really is banking on the fact that people will want to buy more cars online. And I think that it also has to compete with Carvana. And I think that might be hard because Carvana has brand recognition. Now, I personally love this company, but I don't plan to make this a massive part of my portfolio. I'm probably going to be investing between 7,000 and 10,000, and I have most of that money already into the stock already. But if this company continues to show strong growth and the stock price stays under, maybe the $1.5 billion market cap while showing the growth that it's showing now, I'll probably continue adding shares here and there. But it is a riskier stock. The profit rate, the profit margin, everything's a little bit lower. It really is about the volume game. So what do I currently have right now? I actually started buying this company when it was probably a little more than $10 a share. And as it has dropped through the very tough days that we've had over the past couple of weeks, I've been adding more and more shares. I'm probably a little more than 500 shares now, to be honest. But at the time when I was putting this together, I was right about 500 shares with a cost basis of $9.03. I have several call options for $10 and have several call options for $12.50, both of which end in December of 2017. Now, I'm really curious, what are your thoughts on Shift Technologies? Where do you think I'm wrong? Where do you think I'm right? Are you investing in this company? And if there's another stock you want me to dig into, please let me know in the comments below. One of the next ones I'm really excited to talk about is Asana, which I'm still in the research phase on, but it's one that I'm actually getting really, really positive about. Anyway, until next time, thank you all, and please like and subscribe to the video. Peace.